Okay, fam, welcome back. So today we're going to be going over the markets and our recent buys. So with that being said, let's get it. All right. So before I begin, I want to take a look with y'all at the GDP report because that was one of the major news catalysts we were supposed to get. I actually have not looked at this at all today, so this is going to be a first for me as well. I've been busy this morning, so unfortunately I haven't had a chance to look, but let's see. I think it was supposed to be GDP. Yeah, here we go. Okay. So, all right. So the prior results we got for the quarter-over-quarter final GDP growth rate, which let's see, what quarter are we in now? We're in Q1 now, so this probably would have been for Q4 of last year. Would be my guess. Was the results for last year? I really don't know if this is for the previous quarter or not. Let's actually take a look. So it appears that okay. So the data that we're getting now is for this quarter, and the 3.1 was for last quarter. Okay. Usually the GDP is actually something that I don't really look at here on this channel, but the reason why we're doing it now is because the markets are so choppy and we kind of really need a reason to go up. So, anyways, so the forecast here was 2.3%. It came in a little bit hotter than expected at 2.4%. That's fine. I don't think the markets are really going to be freaking out about that because, again, like I told you guys before, as long as there's not too much of a deviation, like if they're expecting 2.3%, we come in at like 2.8%, they might say, okay, yikes, the economy is still too hot. The Fed's not going to cut. And on the flip side, if the estimate is 2.3% and it comes in at 1.7%, they might also say, or 1.5% or something even lower, they might also say, yikes, now the Fed has to cut, and they are going to cut, but it's going to be because it's an emergency, not because of soft landing, right? So not too much deviation, nice slow cooling is kind of what we want to see here, just enough to convince them to cut. So anyways, price index, very similar thing. The numbers were actually opposite, which is weird. This is a little bit harder than the prior, but I mean, it's not really that big of a deal in my opinion. I mean, I've seen the GDP up in the fours. I think even though in the fives at one point. So 2 something percent, not really that much to write home about. Okay, so GDP sales, pretty much the same, right at expectations. Initial jobless claims, right at expectations. PCE, a little bit higher than the prior. This is not really something I'm worried about. It's just kind of interesting to look at. So, anyways, let's go ahead and talk about the markets real quick. All right, so the NASDAQ is slowly, I'm not sure what it's doing here. It's either trying to find a bid at the bottom of this channel or it's trying to break through to the downside. Either way, I'm not really sure. What I will tell you guys is it's testing structure right now. You see these candle tops right here. I've told you guys I've told you guys about this before. And again, we can do a technical video, technical training video or tutorial video, whatever you want to call it, where we just go over what structure and support and resistance really are. But if it is going to hold, it should hold right about at these levels. You can see that's why it's kind of chopping sideways and finding some resistance here from the bulls because, again, this is previous resistance, which also is a structure zone. So, but regardless, the reason why I bring this up right now is because, again, we have switched as of today, at least temporarily, from buying XDTE to buying GPIQ. And I told you guys this was going to happen. If we got below the EMAs, we were going to buy GPIQ. If we were still above the EMAs, we would buy XDTE. Because again, GPIQ is one of those positions we only want to be buying on the dips. So when we get the rare opportunity to do so, we are going to do so. All right, now let's talk about TSLL for a second because I think this is a pretty important thing to point out. All right, so I told you guys about this bump and run pattern before. All right, so we got a double bottom, break of the trend line, right? We're kind of pushing up, nice little gap up, sliding along the EMAs here, which theoretically should produce some kind of bounce at this point. That remains to be seen. Also, still shocked we even got a distribution. So let me scroll back and look at this real quick. So it does appear that, they do give some distributions. It looks like maybe quarterly. They're not that much, but I mean, again, if you have a lot of shares, who gives a crap, right? you get 8 cents a share, but you got 1,200 shares. I mean, you're still talking about $100 every quarter. So that adds up, right? That's about $30-some a month. Something we didn't really factor in. We were kind of actually shocked to see that. But that's not what I want to point out here. So what I actually want to point out, what I think we should be looking at right here, is the bump and run pattern. Okay. So I'm actually going to make this a little bit smaller so we can take a look at it. Hopefully you guys can still see this. So I want to point out, wow, look at how that lines up. Hopefully that's not what happens. So anyways, sorry about that, y'all. Okay, so you can see very similar setup here, okay? So we get the nice little sell-off, right? Blah, 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 blah. It just keeps on dropping down. Actually, I can draw another trend line here too as well. I didn't even see this one. So we can really get this setup lined up nicely. I'm actually going to get rid of this trend line so it's a little bit more obvious what we're looking at here. So you see these two trend lines, right? I mean, it's literally almost picture perfect. So you get this one trend line from this top here, you got a top here, and then you get this drop down, right? You get this drop down. And this is kind of similar to, I would say, probably this or maybe even this right here. And then you get your little double bottom, right? We got 1, 2 taps right here. It slowly moves up, break structure right about here. You see the structure break where it says SL2 and buy 1. By the way, SL2 probably most likely in this case means stop loss. Again, I told you guys about when swing trading with the golden cross indicator, you'd want to get in on the golden cross, then put your stop loss somewhere below the previous low. That's exactly what they're showing you on this chart. That is, believe it or not, that is the way that traders trade. I'm not just making this up. This is actually what traders do. You can see based on this is not, I did not make this, not my own personal information. So, but regardless, it appears that we may be getting a higher low here, right? So we're holding this previous structure right here with these candles. And that could be right about what we're looking at right here on this higher low. So theoretically, if this thing's to play out, it's going to pop above the second trend line, which again, we have 1, 2, 3 taps, right? 1, 2, 3 taps, get a break above it, chop sideways, and then keep climbing higher. There is some eerie similarities between this pattern display and what we're actually seeing on TSLL right now. So I would be willing to bet that if we go over to Tesla, we're probably going to see the exact same thing. So let's just take a look real quick. And again, it's a mirror of the underlying stock, but you'll see my point in a minute. So what do we got here? 1 trend line, 2 trend lines, right? Very similar setup here. And again, there's a lot more lines here, but you kind of get the idea, right? So 1 trend line down, there's the bump, right? And then we run, tap into resistance, and then boom, take off. It's already played out here apparently, but you can see it here, bump, right? This is what the bump should look like. It should look something like a kind of like a slant and then drop down and then pop back up. It kind of looks like it here or maybe here. And then we get the double bottom tap and then boom, pop above the first trend line. We got that. And then we're kind of retesting this these candle highs right here, which is also known as structure, with some candle lows as support, which we're getting right now, right around this SL2. Again, this is never going to look picture perfect. And then you got 1, 2 taps, and then the third tap of the trend line. On the third tap, the breakout happens, and that kind of looks like it's what is trying to happen right now on both Tesla and TSLL. So bump and run is a very rare pattern. It's not very common, so that's part of the reason why I bring it up. I don't actually know what the probability of this pattern is, but assuming that it is rare, my guess is it has a high probability of playing out. So just want to point that out real quick. Now I'm going to go ahead and cover Bitcoin real quick. This is going to be a shorter video. We'll talk about more in the upcoming videos we're going to do. But Bitcoin trying to create some higher highs, higher lows here on the 4-hourly time frame. That's actually looking quite bullish in my opinion, because again, we are kind of holding these, as we're climbing, we're slowly holding these structure levels. I mean, I could draw a line here, but you guys kind of see it, right? Candle high, or yeah, candle highs, candle lows, and then again here, right? Candle highs, candle lows. So you see what's going on. Daily trend line. So this is quite interesting. I would not call this a bump and run pattern. This is probably more like just a standard double bottom and a breakout. We are getting the golden cross here on the EMA, so it might be about ready to pop to the upside. That could be the case. I will say once again, Bitcoin looks like it's doing okay now. I suppose it depends on how we end the week, right? Because again, I told you guys that the weekly candles, in my opinion, are the only thing that matter here. If we get a break of this white trend line, probably something a little bit more like this. So if we get, a break of this white trend line with a weekly candle, that's, in my opinion, and especially above this green line right here, I would say that's extremely bullish because, again, you can see the green line lines up with some candle highs, right? So we definitely want to see it get back above there as well. That would be the first bullish signal, and then we would move up to about 97, 98,000. And then if we get a break above that or not determines, in my opinion, whether we're continuing this bull run or not. Based on the timing, we still got 9 months. So in terms of the NASDAQ itself, I mean, we're kind of mostly just flat on the day. I mean, 0.25% is not really much of anything. Okay, so I know that dragged on for a little while, but I felt it was important to tell you guys this because if you guys are positioned in TSLL or Tesla or anything Tesla related and you're interested in buying more, I wanted to point this pattern out to you, not to mention Tesla and TSLL have gotten absolutely apocalyptically destroyed over the last 7 weeks. Just for us to get this kind of rare bullish pattern is extremely important to pull up, in my opinion. So, all right, let's take a look at the buys real quick. Swing trade still the same. So RGTI, ALT, FATE, and APLD, nothing's changed here. It's all still there. At XDTE, we're at just under 19 shares at this point. Again, it really depends on the price action, what we're going to do. So anyways, let's take a look at GPIQ real quick so I can show you guys this. And again, GPIQ is very cheap right now compared to where it used to be. Anybody that's looking to pick this up, now may be the time to get in on this dip while it's there. I mean, it's down about 10% from the previous all-time high. It's pretty rare for us to get those kind of drops. It appears the last time we actually got a 10%er to the downside was right around August and September of last year. So you're talking nearly 6 months at this point. And then, yeah, just kind of really small dips along the way, but mostly up. So rare opportunity here. If you guys want to take advantage of it, it's here. So roughly about 46 for our average with 45 shares. Again, the minimum goal here is to get to about 70 to 75 shares. That would get us about $30 a month, but it depends on the price action. So we bought 4.35-ish shares today on the dip, of course. Could have waited a little bit longer, but again, I mean, the markets are already down roughly about 10% from the high, so we're not really caring too much about perfection right now. Okay, TSLL. So wanted to show you guys this. So another 5 shares at 1171. Again, it did dip lower than that later in the day, but am I concerned about that? Not really. I mean, it's just, a dip buying opportunity is a dip buying opportunity. It doesn't need to be down to the penny. We got other stuff to do too. We're not just going to sit here all day watching the price unless we're actually day trading. So nice little dividend coming in, which is great. We could do some options too, but we're not going to do so at this time. We'll let you guys know when we are. So average cost here at $12.52 with 1,215 shares. And yeah, I mean, we're just going to slowly, we basically, basically as long as the price is still below our cost basis, we'll probably just keep nibbling in for now. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.